What's happening in the stock markets? Just when everything seemed to be riding high on artificial intelligence, AI, a sudden shift has sent shockwaves through the US and Asian markets. Stocks that were once the darlings of Wall Street are now plummeting, leaving investors wondering what went wrong. AI stocks in particular have taken a heavy hit, dragging down major indices in both the US and Asia. So what's behind this sharp decline? Let's break down the factors at play and what it could mean for the future. It started with a mix of market sentiment and economic uncertainty, which quickly spread fear among investors. AI stocks, which had been skyrocketing for months, began to experience significant pullbacks. Companies that were leading the AI revolution, such as Nvidia, Microsoft, and Alphabet, saw their shares dip dramatically. It wasn't just a minor correction, it was a full-fledged slide. Investors who had placed their bets on AI's unstoppable growth were suddenly left reeling, with some scrambling to offload shares. One of the primary reasons for the slide is the increasing concerns about overvaluation in the tech sector. AI stocks have been booming since the beginning of 2023, with many companies posting record gains. However, analysts have started to raise alarms that these stocks might be trading at unsustainable levels. The excitement around AI and its potential to revolutionize industries has driven stock prices to unprecedented highs. But as with all market bubbles, what goes up must eventually come down. Economic data coming out of the US hasn't helped either. Inflation concerns and uncertainty about the Federal Reserve's monetary policy have added to the anxiety. While inflation has been cooling, the possibility of future rate hikes still looms large. The Fed's cautious stance has led to worries that interest rates could remain higher for longer than expected. This is particularly concerning for tech companies, which often rely on low borrowing costs to fund their expansion and innovation efforts. In addition to the economic headwinds, geopolitical factors are also weighing heavily on investors' minds. The ongoing tensions between the US and China have led to fears of potential disruptions in supply chains, particularly for tech companies that rely on components from Asian manufacturers. These tensions have been compounded by the recent sanctions and restrictions on the sale of high-tech equipment to China, further stoking fears of a global slowdown in tech innovation. The impact of the AI stock slide has been felt across the globe, with Asian markets also taking a significant hit. Many Asian tech companies are closely tied to the fortunes of US-based AI giants, and as those companies saw their stock values decline, the ripple effects spread quickly. Tech-heavy indices in Japan, South Korea, and China faced notable losses as investors pulled back from AI stocks. Despite short-term volatility and concerns over valuation, analysts view this as a potential correction. Long-term prospects for AI remain strong, with ongoing innovations and demand expected to drive future growth. Please like, share, and subscribe.